well, doing this video again, but anyways, hello YouTube. I've been, I was going to post 2 videos or like 3 videos already because I haven't traded in like almost 2 weeks. But the main reason was because I lost most of my content. I was recording a lot, but I was switching phones, so I basically lost almost everything. But today's video it's about strategy, more in depth. I've kind of rinsed it down to something faster, but my strategy is basically it's pretty simple. It's basically using today's bias or any day bias. As in last week, I could check almost everything and kind of predict almost on a daily basis. Even today, I predicted it right. I just didn't execute mainly because of this choppiness, and it was just I have certain rules that I follow, and yeah, that's why I didn't trade after. Oh my God, what's happening? Yeah, I didn't trade like after 9 because it's just one of the rules that I have built into my system. So I really don't want to break it. I want to stay as disciplined as possible because having a strategy works, but with like bad what do you call it, discipline, it's not gonna work. So what I want to talk about is the strategy that I use, and one of the first things that if you want to copy the strategy to be profitable, it works. It's just takes time and like just learning almost everything about the markets, how it moves on a daily basis. That's why I tell most people who are trying to start or whatever to take at least 3 months to learn for value gaps, universal value gaps, any equilibrium, like anything that they could use to predict these markets. So I mainly only use fair value gaps, inverse fair value gaps, and that's mainly SMTs. I see them, but I really don't execute on them. I yeah, I use a lot of liquidity sweeps. Mostly it's about liquidity. Yeah, that's basically the confluences that you should learn before like trying the strategy, so you understand what you're really doing. Because I'm just gonna mark out like certain things that I believe that I normally use, but I am gonna go in depth on how I execute them. But those confluences, I'm not gonna go in depth in this video because it's gonna be long already. Okay, so first for my first step, I basically look at the 1 hour and 4 hour. I check the bias. That's how I check the bias for like every day. So what I mean by that, for today on that 1 hour, it just it was it was some shortcuts down here, but most of it is just on an uptrend, basically. Which is a 4 hour, we're also on an uptrend. So the daily bias is basically just keep going up, mainly because our our starting thing started all the way down here. So what I would think it would sweep these lows to create then this, like basically liquidity sweep, but it's just over 4 hours. There's no really saying of what could happen. But anyways, I would say this is liquidity sweep and it just went the other way because we've hit those previous lows. We've even gone lower. So that's not how I check the bias or even for a downside day. I check basically I want to have as most what do you call it, information as possible, and I want to have a continuation to the downside or to the upside. So that's how I check the daily bias. If you were ever wondering what I think about the day, is if you click the 1 hour and the 4 hour to check the charts, you would know like what's really gonna happen for the day, or we could just have a news day and it could go the opposite way, or you can just continue. So that's why you need to really understand some confluences and how to play with news and how to use everything to your advantage. But today's video we're focusing on strategy. What I first do when I wake up. So let's say market opens at 8. Well, for me, since I live in Texas, it opens like around 8:30 a.m. So I wake up at 8, like 10 minutes before. You can wake up earlier to do your morning routine or whatever, but really, sometimes I wake up like 5 minutes before market open just because I do the same things every day. I don't have to really do much of that. Maybe it helps, but I don't know. Just I'm not a morning person. I don't think I'll ever be, but for this trading stuff, I've been getting better at it. And yeah, today's literally my today's profit target. I basically did this. I used to do that all the time. I was marking out this high. That's a yeah, that's a big trade or whatever. Anyways, for normal like New York open hours is basically 9:30 for New York. And to get more in depth into this, we're gonna use this indicator. This is what I tell everybody to get before starting. Before I used to use this indicator, I would mark out the highs and lows of each session, like Asia session, London session, and everything. But to save time and to save like my brain like struggle, because I would tweak out whenever I had to reading like the numbers down below just to figure out which session was this and which session was not. And then, but with this, it makes it a lot easier because it marks out London highs, London lows, Asia highs, Asia lows, and then starting of New York or before it starts. Yeah, and then so yeah, that's the one of the first things I want you to do. If you want to copy this same strategy, I use ICT kill zones. That's basically the name. You go to the indicator tab. I really don't know where it's at anymore, but go to the indicator tab. It's right here. And you put ICT kill zones plus pivot, and then yeah, you just add that to your thing. So it's gonna pop up here. This is how you use it. You could use that to mark out basically London highs. Since Asia highs and London lows are pretty close to each other, I think I'll just mark out London lows and Asia low. So yeah, so basically that's all the information we have. That's the only thing I'm marking out. Of course, we're like from here, I wasn't gonna know what was gonna happen. It was just like around here, right? But the way I approach this is check for the 1 hour and 4 hour. Just that's literally my bias for the day. There's no analyzing to it. I just see if I see the 1 hour up and I see the 4 hour up, it's probably a buy like a long day. But if I see like the 1 hour low and then the 4 hour low, then that's a short position. Like it's pretty simple, and you start get those highs and lows. Okay. And then next step is pretty simple, and is you wanna look for a 5 minute confirmation confluence. Basically, they show up as breakup structure, inverse for value gaps, 79% extension, Fibonacci or whatever you wanna call it. It's just a tool, or SMT. You wanna look for one of those. So we let you check the 1 hour. Let me write it. Fine. Sure, I don't know how to spell confluence, but you get the point. 5 minute confluence, like I said, break structure, inverse fair value gap, 79% extension, or SMT. And yeah, that's basically what I look for. This is a bad day to really show that strategy, but let's say we're on this one. Yeah, I think it's Friday. what I'm looking for is when market yeah, basically when market opens on the 5 minute, we see a break of like it's going up. We see a break of structure, or you can even call this yeah, a fair value gap. Mark this out right here. Bro, what? Why does he keep doing that? I don't know why. Broke it. That's an inverse rally gap. I would expect to go the opposite way. If by any means like the 1 hour and the 4 hour, no, I mean if a liquidity happens before market opens, or like anything happens before market opens, like kind of like today, we saw a liquidity sweep to the upside before market open, and then it just shot back down, right? If that happens, we basically wait for a liquidity sweep. Wait, I'm saying that wrong. If if a lot of volatility shows up before market opens, normally we look for a liquidity sweep, just because if there's a lot of movement before market opens, there's not gonna be a lot of movement after. So to secure a position, we're gonna have to wait for a liquidity sweep to sweep lows and then go the opposite way. That's the goal. Like if it does happen, normally market, it's, I mean, it can do whatever it want, right? But normally it doesn't do like a tragic or a big pull or like a big push. Some days it does, but like this London low, I mean London high had a big push. So basically before market open, the high was already there, and it was, yeah, trailing down to the downside. And then we saw basically, yeah, we saw a liquidity sweep, went to the downside, and we could have taken that trade. Whatever. That's what I'm looking for. If by any means like market opens and then but you see a big candle before it, and then you're like, yo, the move's done. Like it happened before market open. Most of the times, and it's proven that most of the time you have to wait for a liquidity sweep. Like before this happened pre-market, it went up. Wait for a liquidity sweep. After that, we just wait for a continuation, and then that's basically banged out the trade. Like around here, you would take it because it's more clear, and then you take it to the upside. So yeah, these stuff really matters. Like this fair value gap, or like inverse, whatever you want to call it. But this fair value gap is basically what could have led this whole position to the upside. And then of course we haven't hit this high yet, but still like it's around there. You could have taken another position. That's a, how much is that? Yeah, it's a 1 to 3 risk to reward. Anyways, so first things first, if we go back to our checklist, we check the 1 hour and the 4 hour for any session starting. After that, we want to look for a 5 minute confirmation confluence to whatever side. Like it doesn't matter what happens, but we have a clear view of what could happen just because of the 1 hour and the 4 hour. And now we want to see a continuation, or like I said, a break of structure to go the opposite way. And that's if anything else happens before that. Let's say we have this big candle before market opens, and then market's like a bit weird. Most likely, you should wait for liquidity sweep. If not, just take the day off, take the trade off, because it might be just choppy and you might not get a trade in. It's like one of the worst days to trade if like market moves before it opens. So let's say the the second option that we had, yeah, the 5 minute confirmation happens. Like, yeah, it happens. Whatever it is, equilibrium, break of structure for value gap, SMT, whatever ends up happening goes through. Now, what you want to look for a 5 minute confirmation only if we have equilibrium for value gap or SMT. So there's more confirmation to this. After we see a 5 minute candle do its thing and show us a confluence, we want to wait another 5 minutes just to make sure that whatever's happening is more clear than ever for you. So yeah, like I said, you have to learn these confluence, equilibrium for value gap, and Fibonacci extension. They're all here. SMTs are really easy to learn. You can go look up a tutorial or whatever. They're pretty easy to understand. After after we kind of have an idea of the daily bias of what could happen. Let me write this down. I would say 5 minute confirmation to the outside, meaning as in if we start seeing an uptrend, I want another 5 minute candle to show up or whatever, just to have a confirmation that we are on a steady path to the upside or to the downside. I really don't take scalp trades. It's just mainly like I just don't need to be sure. That's just an exercise that I would like to do. After that, we go to the 1 minute. Basically, we go to the 1 minute to confirm that movement. Just another confirmation step. Because on the 1 minute, you really, on the higher time frames, is to look for the bias for the day. On the lower time frames, is to look for the entry or when to enter. That's the simplest way I could put this. So let me write that down. Oh, that's not 1 minute confirmation. So that's basically the steps for A/B trade that I take. I check the 1 hour, 4 hour, just for the bias of the day, just to make sure that what I'm thinking just by looking at the charts, it's sort of correct. Then we wait for a 5 minute confirmation confluence. Like it could be, like I said, for value gap, equilibrium, Fibonacci extension, or the SMT. It could be even an inverse for value gap. It doesn't really matter. If anything happens before that, you have to always, most of the time, it's a liquidity sweep. If I don't find a liquidity sweep, it's done. So like, I already broke one of the rules, so I'm like, bro, we're done. Okay. Let's say everything's playing in my favor, like today. It would, they just took a little longer. That's what made that was the deciding factor of today. I just didn't want to trade after hours. I don't like trading after. But let's say everything played out, 5 minute confirmations, you see a equilibrium or a fair value gap like this one, and it keeps coming up to that side. So this is a 5 minute candle. Let me show you more in depth so you have a visual representation. I have a 5 minute candle, and then I have another 5 minute candle to the upside. So that's like my confirmation. You can go to the, oh, this is a 1 minute. So yeah, these are big candles, like 5 minute, 5 minute confirmation, and then we look for the 1 minute confirmation. And we do have a wick out down here, but it's a fair value gap, so it comes down and it comes right back up. After that, basically, what's left is just take the entry, and then target. Then we're gonna target draws and liquidity, basically like this high, this high. I mean, this is a bad take just because we don't have that much data. But yeah, that's still would have been in a, like basically in the levels that I'm looking for, or even like down here. Basically went to the, let's go to the 1 hour. Where's my, what is it doing? Yeah, we're going to the 1 hour, 4 hour. We're seeing that it's a down, it's starting to come downtrend. Then we go to the 5 minute. We go to the 5 minute, and then we're still seeing a downtrend. Go to the 1 minute. It's a confirmation to the downside. Oh wait, yeah, I missed one step. Then there's another 5 minute coming down downside. Then we go to the 1 minute, and if we see a continuation, most likely that's where we take our trade. And then the draws on liquidity are just previous lows or highs. Like, yeah, we'll mark out this one. This one. So that would be my lows. Of course, we didn't get through there just because I don't really trade London. I wouldn't put that 100%. But I'm trying to find a better point where to basically, or like this one. Yeah. Basically, if we were to go buy for this day, our draws on liquidity would be London high. But if we were to wait after market open and whatever, and we would have taken a short position, we would have still target London lows. And that's still, those were both profitable like ways of draws of liquidity. You could have won both ways if you were like at the right time. I'm sorry for the disconnect. I was just thinking too much on what to say. But yeah, that's basically more in depth of my strategy. And as you can see, it happened today. I was right. It just took too long for the setup to happen. That's why I did not take any trades today. I'd rather play it safe than to be right and then lose money. So back to this 1 hour check if everything's well. However, the day is starting because normally Asia and London don't really dictate of what's gonna happen on New York, but it helps me have like a better, like a way better, like what would you call it? Yeah, basically bias of what's going on. So the 1 hour and the 4 hour are basically for that. Higher time frames are for to see the bias. Lower time frames are for entry. Just, that's the simplest way I can put my strategy as. I don't do anything too fancy. Of course, I know what every confluence does. So maybe if you don't know, then you should start watching videos like what's equilibrium, how to use Fibonacci extensions, SMTs, and any of those things. Then we want to wait for another confirmation. But if let's say a big push happens before market opens, and you feel like after market opens, if the push is already done, it's not gonna move as much. Almost like how when people trade Asia session or whatever, like they have a big pull or whatever, right? Or even most of the times it doesn't even move. But whenever we hit the next session, since it had such a big, tremendous pull, the other sessions are kind of dead. Like they don't really do nothing. Like so, yeah. And last week was crazy, but most of the time that's how I seen it. I don't really trade Asia nor London, so don't quote me on that. But that's what I feel like. My rules are I don't trade. I trade from 8:30 to 9, basically. So it would be from 9:30 to 10 a.m. on like on New York time. Over there is 12. Right now for me it's 11, but I have the time wrong. So yeah, I'm an hour behind, but yeah. So my basically those are the rules for my day. Is I don't trade after 10 or like after 9, just because I feel like volume slows down. I mean today was like literally the opposite. This whole video is doing the opposite of what I want to do or what I want to show. But yeah, for today it was, yeah, after hours of my trading, shot up back to where I didn't want it to go, but where I wanted to go, but I just I don't know. That's one of my biggest rules, and I really don't like to break it just because I've lost more money like trading after those hours. So wake up. That's basically my routine. Wake up 5 to. I would want to do 30 minutes before market open just to see what happens, but almost nothing happens before market open. So that's why I wake up like 10 to 15 minutes before, or even 5 minutes before market open. And of course, it's not like that's not good, but it hasn't changed the fact that I've been winning or I've been getting most of my trades correct. After that, I open TradingView and then I set up my if I have Trade Locker on or if I have an eval through here, TradeAway, I set up everything. I check the 1 hour and the 4 hour before market opens because I don't want to look at the 1 hour and 4 hour when market's happening and what if like the movement happens before I even get set up ready and then it's done for the day. Like I really can't do nothing about it. So after that, wait for a 5 minute confirmation confluence. So I want to see what happens in the first 5 minutes. Could be liquidity sweep. Most of the time it's liquidity sweeps. That's the most common trend we've had this year. After that, I want to wait for another confirmation. Like that's like that my confirmation is still happening or it's still continuing. Then I want to see a 1 minute confirmation just to the whatever side it's going. If I see that's really going up and up and up on a 1 minute, then that's my cue to enter. Because if I overthink it and then I mean, of course, that's why I confirm everything before I take a trade. But if I overthink it, I miss the whole trade. So those are my steps that I take. I really don't like trading after 10 or whatever, just because volatility slows down. And we're looking for a day. We're looking through the 1 hour. After that, we target draws on liquidity. Let me write that down. Target draws on liquidity. That would be like previous. That's why we mark out the 1 hour and 4 hour sessions, yeah, for the day. That's because those are my draws on liquidity. That's the simplest way to put draws on liquidity. It's just where um yeah, when liquidity had the most impact. It was on London high, London low, Asia high, and Asia low, just because that's the starting and the ending of each session, and that's basically where most of the liquidity happens. Like here, after London ended, we have like a 30-minute gap or like something like that. We just had a up candle on the 5 minute, so it wasn't before market, but it was kind of before. So it was in a weird state of that's why we had all this choppiness, and I just didn't take the right approach on it. But still, or draws and liquidity could also define like this. We had a previous New York low from last week. This is how I trade every Monday, just because um we don't have data after here. We don't know what happened. We don't know really 100%. We're not sure why it ended up down here. So yeah, what I do normally is that it's gonna go back to its original state, and hopefully tomorrow we start to see like well, by today I wanted to have the mid section of this like covered up. We might see like a low trend for tomorrow, like around here, around these gaps or these previous high on this session, and then we're gonna potentially see a trend to the upside or even break uh break higher highs, all-time highs. That's what I mainly look for in my strategy. Let me try to go through my list just to be 100% transparent of what I'm saying is true. Cause I have like I think it's like 10 rules that I have, or a little more. So I can explain them to y'all. Oh, one of the newest rules that I added to my arsenal was not trading Fridays, because Fridays either market crashes or it just whatever it was. I really can't find it. So, I mean, yeah, I'm gonna just leave this video as is because I really, I really don't have them on deck. But yeah, first things first, 1 hour. Like I said, I don't, I do not enter a trade before market open as well. That should be a rule. Just because I used to do that before because I didn't know when market would open and stuff like that. But I would see that I would I would like to trade like at 7 a.m. just because I saw volatility moving. But for as of now, we don't do that. Just because look at this. Yeah, we shouldn't be trading around these times. But yeah, that's basically my whole video. This my strategy. It's nothing too special, but I hope this helps anybody who's trying to see what I do more in depth. Of course, this applies to every market that I look for. I mean, these are all Nasdaq, but it's the same thing. And that's basically it. I would I would prefer y'all to go to TGR's video. He explains a little bit more in depth, just because I don't know how to be like a mentor or like explain things 100%. But this is my way of like showing how to enter or how I look for bias, what I look in a trade, how I enter a trade. That's why I explained the time frames, like the 1 hour and 4 hour. That's what I use. The higher time frames, I use it to check out what's going on for the day. The lower ones are just to see my entry. And yeah, the strategy doesn't have only like a downside, or like, I mean, what do you call it? The strategy is not only for selling, it's also for buying. It helps both ways. Of course, last week we had a lot of dumps in each session, and it could have helped, but it's also really useful when you're buying, like previous trades I've taken. I mean, yeah, these are all sell, but most of them that I've taken big, it's up. Like this one, it's up. So you can use this strategy both ways. There's not a like a stuck pattern or like I'm just looking for a sell position or I'm just looking for a buy position. It works both ways. That's why trading is really risky because I could check off all this list and still lose money just because it's not 100. Nobody has a 100% win rate, right? This is just a checklist that I do every day to have like a prediction of what could happen today. If it goes my way, well, I did my job, I did my part, I was disciplined. But if it goes wrong and I still check off this and it was an A plus setup, but news took it out, it's still a win in the books. This is not really a get rich quick scheme, and it's not a 100% probability list. Like this, my strategy has flaws built in, like every other strategy, and it's not a 100% like a win rate. Probably what TGR says, it's 70% or like around 60, 67%, no pun intended, win rate. So of course you're gonna have losses even if you check off this list. That's why you just have to build up the maturity in the charts or the experience in the charts of what could happen today. Like today, after I seen this choppiness after market open, just because I have the experience of the charts, I really decided to take the day off. I wasn't gonna trade last week. Also, it was a good week, but I felt like I wasn't gonna be as patient as I am normally, and then because I had so many things going on. So yeah, this is literally everything you kind of need to know about trading. It's not a get rich quick scheme. It's not as easy as it looks. It, I mean, yeah, it's pretty easy on paper. You follow a chart. I mean, you follow a strategy. Click buy and sell, and then you're done for the day for 1 to 2 hours, and that's it. Sounds easy on paper, but it's not. I literally, I mean, I probably haven't posted any videos of me like my journey of my trading. Or was this done? Oh, let's put it back here. I haven't posted any videos of my like my my life or like my journey on trading, but yeah, this didn't come as quick as just watching a couple videos. It was countless nights trying, replay after replay, trying to figure it out, and then that's what it takes. You kind of have to be really delusional of what you're doing. Just believing it's gonna work, and that nobody else can stop you. Yeah, I hope you find this video interesting. I know I'm rambling all around the place just because I'm not really 100% a mentor, or I'm not a financial advisor. I really can't put it much into words since most of the time I just trade. I don't really talk to anybody. But yeah, I hope this video helps. If you want to take a screenshot of this, of course, I would recommend to go to TGR's video, strategy video. It's basically the same thing, just that he writes down break of structure, Mr. Value Gap. He writes everything down, and it's a lot more simpler. But yeah, I'll see you on the next video. Bye.